As we enter 2022, we are seeing this very strange mixture of economic conditions that, frankly, we've never seen before. On one hand, we have super low interest rates, but we also have really high inflation. All sorts of companies are posting for jobs and want new workers, but the jobs reports keep being weaker than expected. And with all this strange news that we hear and all of these weird market conditions, it has a lot of people wondering, how should I invest in 2022? So today, that is what we are going to talk about. I'm going to share with you my 3 guiding principles for investing in 2022 and how I am planning to approach this very uncertain year. Hey, what's going on, everyone? This is Dave Meyer with BiggerPockets, and today we are going to talk all about how to invest or how to think about investing in 2022. But before we get into this super important and interesting topic, we ask that you please give us a like. It costs you nothing and it helps us a whole lot. And if you appreciate this type of data-informed content, please follow me on Instagram at The Data Deli. All right, let's jump into how I am planning to invest in 2022. Now, I think it's everyone's job, myself included, to come up with your own thesis for investing, right? There's all sorts of pundits. There's people like me who go on YouTube or on a podcast and talk about how I'm investing, but it's really up to you to come up with your own thesis. And when I do this for myself, I like to keep it pretty simple. I just want to come up with really high-level topics that are going to guide my thinking and guide my investing for the upcoming year. And so for this year, there are 3 things that I want to share with you that I'm thinking about. The first one is that of all the asset classes, I personally think that real estate is still the best. Listen, I know I work for BiggerPockets, so I do believe in real estate investing, but I also invest in cryptocurrency, I invest in the stock market, and I invest in bonds as well. And actually, in recent years, I had been investing more and more on the stock market because the market conditions seemed really primed for a run up in the stock market. And that's what we've seen. We've seen huge growth in the stock market over the last couple of years. But as we enter 2022 and I look at these different asset classes, I see bonds, and those yields are really low and are not even keeping pace with inflation. Then I see the stock market, which has really high valuations, and for the last couple of months has seen a lot of volatility. A lot of really experienced traders who know way more about the stock market than I do are saying that a correction is imminent. And then third, when I look at cryptocurrency, and I do invest in cryptocurrency, I think that is really volatile, especially with all this economic uncertainty. I don't feel as good about crypto in 2022 as I have over the last couple of years. Could I be wrong about these things? Definitely. But I am looking at this economic climate and seeing a lot of uncertainty, and that makes me want to be a little bit more conservative. And to me, that means investing in real estate in a very conservative way. And being conservative doesn't mean that you can't make great returns. I'm going to talk about how I intend to make great returns in the coming year. But for me, in 2022, I'm going to put more money into real estate than I have in the last couple of years. The second thing I want to talk about is inflation. And this really has to do with everything. It's all interconnected, but inflation is really high right now, if you haven't already heard. It was at 6.8 at the last reading. I think the next one's actually coming out before this video comes out, so we'll hear about what the CPI did in December soon. But it's probably going to come down in 2022. Most experts think we're going to come back down to 3 or 4% year over year growth rate, not at the 6.8% that we are right now. And let's hope that happens. But at the end of the day, inflation is still really high. And to me, that means I don't want to hold a ton of cash, because if you put $100 in a savings account and just let it go for a year with 7% interest, you're losing $7 for every 100 you have invested. And now I always recommend you keep a solid amount of cash in the bank. You need to have an emergency fund, at least 3 to 6 months of your expenses. And for me, I'm also keeping a little bit more cash in reserve in case there is a stock market correction and I want to invest some more money back into the market once they're at low valuations. But I don't want to hold a lot of cash right now because it's just losing a lot of money sitting in the bank. The third thing, so the first one we had was that there's a lot of uncertainty in the market, and I see real estate always as a solid long-term bet. Number two is that inflation means that you have to do something with your money. I don't think it's a good time to sit on the sidelines. And number three is low interest rates. So the third thing I really care about right now is that interest rates and mortgage rates, more pertinent to any real estate investors, are near historic lows. People are talking about interest rates rising. I'm one of those people, and that will have an impact on the housing market and the economy as a whole. But we're talking about going from 3% on a 30-year fixed rate mortgage to 3.5%. We've basically never seen rates this low. So even as they crawl back up to 3.5% or maybe 3.75%, which is where I think they'll end up by the end of this year, I don't think we're going to see this huge pullback in home buyer demand, given everything I'm talking about. A lot of other assets are not very attractive right now. So I think people are still going to be putting money into real estate, and I am going to be one of those people. So just to summarize, the three things are uncertainty in all asset classes, inflation that is higher than normal, and record low interest rates. Again, the interest rates, they're going to go up, but I want to lock in those super low rates right now because I'm investing for 10 years, for 20 years, for 30 years. My time horizon is really long. So those are the three factors. And what my thesis is, just to summarize, is that I am going to invest for the long term. When I see these fluctuations in the market and a lot of volatility, yes, it can be scary to enter the market. But again, inflation is a risk as well. So doing nothing is also a little bit scary. And to me, I am going to invest in things that I know 10 years from now are going to be great investments. And I'm going to try not to freak out if something happens in the next 2 or 3 years. And I know that's easier said than done. It can be hard if something happens and housing prices go down, but they're going to go back up. And over the long run, you're going to generate cash flow and you're going to generate great equity with real estate investing over the long run. That's why I'm thinking of investing this way. And the strategies that I'm going to use specifically in real estate investing are first and foremost buy and hold investing. It is the old bread and butter, but I think it's a really good time to be a buy and hold investor because rents are going up so much. And this is something I'm working on right now. I'm going to release a video next week or 2 weeks from now, all about rent and rent growth. But I think right now, if you can lock in those low interest rates, you're going to see rent climb and cash flow is going to get better over the next couple of years. So that's why I'm first and foremost looking at buy and hold investments. Second is short-term rentals. I only own one right now, but I think short-term rental market is exploding with good reason. Shifts in what travelers like are going to continue, in my opinion, and I think it's one of the best ways to generate cash flow right now. Now, while BRRRR is a really popular strategy, I am not going to be looking at big BRRRR projects over the next couple of years, or at least in this next year, I should say. And that's because, one, I live in Europe, so it's harder for me to manage construction, but also labor market and materials costs are really high right now. And that's just more risk that I want to take on right now when I think that buy and hold and short-term rentals with minimal rehab and construction work are going to do just fine for me. And then the last thing I'm going to do is look for syndications for large multifamily. So I am an accredited investor and I am going to look to invest with experts in multifamily. I might look into self-storage deals or maybe even retail or commercial. I live in Europe and I do want to mix passive and active investing. And so on top of the active investing I'm going to do, which are buy and hold and short-term rentals in 2022, I will also be looking to do big syndications. Now, I've mentioned most strategies right now, and the one I'm not going to look into is flipping. I'm not a house flipper. I've never done it, but it's also, I'm not interested in getting into it again right now because of the same things I said about BRRRR. I think that material costs are really high. I don't own a construction company, and so I'd be paying a lot to have people come flip houses for me. And with appreciation likely starting to slow down, I'm not sure it is the best time to be a house flipper. At least for me, I'm inexperienced in it. I'm not going to get into that right now. All right, so that is my thesis. Try to lock up rentals for the long run. I want to get as much leverage as I can. I'm not trying to over leverage and be irresponsible with debt, but if I can find good cash flowing properties that will allow me to hold on for a long term, even if the market goes up or down or up and down the next 5 years, I want to hold on to the long term and find assets that are going to be valuable to me 10, 20, or 30 years from now. And I recommend you guys do this as well. Again, this is my thesis. You got to figure out for yourself what you want to do. But with all this uncertainty, I really think the most important thing is think about the long run and where you want to be several years from now in the next economic cycle. Where do you want to be? And you can make decisions about your investing today to help get yourself there. All right, I hope this recap of my 2022 strategy and philosophy was helpful to you. I'm Dave Meyer for BiggerPockets. Please, again, like this video, subscribe to BiggerPockets, follow me on Instagram, and I'll see y'all next week.